Investors seeing green in 2023. Will they be popping more champagne in the new year? Hello, everyone. I'm Edward Lawrence in for Neil Cavuto, and this is a special edition of Your World. And it was a special year for stocks in 2023, with all three major averages surging. This coming despite rate hikes from the Fed and price hikes that had customers scrambling. But with inflation now cooling and rate cuts possibly coming, could this rally keep going? Let's ask our new New Year's Money panel, Lee Munson from Portfolio Wealth Advisors and Catherine Rooney-Vera from Chief Market Strategist at StoneX, which I love that name, by the way. Okay, Lee, though, let's start with you. Where does the market go in 2024?
Well, let's look at where earnings are going, right? Even after all the estimates have been brought down, we still have about, depending on where you ask, 8 to 10% earnings growth going into next year. So if we just look at where the S&P is now, if we can really grow at another 10%, I think we can get well into the 5,000s, maybe 51, 5,200. You know, I'm not here to make an end of next year prognostication, but I think we're going to see more up next year. Just remember, it's going to be a little rocky. I think investors aren't really aware that if we get any little hot prints of inflation or any little things that doesn't show inflation is sinking like a rock, you're going to get more volatility. People are going to lose hope. But I think any lost hope, that's a chance to buy low.
This is on tape. We have this for next year. So, Catherine, in 2023, we saw the rise of AI. No, I'm not talking about in the Terminator way. You know, I think one of the movies was The Rise of the Machines. But the AI boom for big tech stocks like Microsoft, Amazon, Google, even IBM, will that continue?
Well, let's hope it continues, because 30% of the S&P 500 is comprised of those technological companies. But look, I think the best bet for the S&P next year, if it continues to move higher, is a broadening out of what we've seen in 2023, which is really the Magnificent Seven, really running the table in terms of the equity move higher. So if we get a broadening out, and if the Fed is able to nail this perfect landing scenario, which is that they end inflation with 525 basis points, 5.25 percentage points of hikes without inducing recession, without sending the unemployment rate higher, then I think equities could move higher this year.
That would be very interesting. And do you think AI still leads the way? I mean, you say AI, and Catherine, I'll ask you this. You say AI, and a company's stock pops, it seemed, in 2023. Do you think that continues, or do there have to be results now? This is how AI is growing my business.
Yes, AI has to deliver. It's been the buzzword. Every company in their earnings reports and their guidance talks about AI because it's the cool thing to talk about right now, and it gets your stock price moving higher. And we've seen productivity gains do very well, but for them to productivity to continue to move higher, I think we need to see execution, not just talk about adoption of AI. And up to this point, Ed, what I would tell you is that in a large magnitude, companies talk about it, but they really haven't deployed it in its full magnitude.
Interesting. So, Lee, let's stay with artificial intelligence. We have the first now lawsuit from the New York Times suing Microsoft and OpenAI for using thousands of its intellectual property to teach ChatGPT to learn. Will there be an AI reckoning in 2024, you think?
Oh, I'm sure there will, because this thing is going very fast. I woke up this morning not that hungover. I didn't drink that much champagne last night. But when I start thinking about what are the things that are going to surprise people and cause stock prices to be volatile, that's not the Fed, right? The number one thing is, what if we get a major lawsuit with AI? What if Congress tries to get in there and monkey around? I think those lawsuits are going to be weak. I don't think that we're going to have, we do not have the same type of totalitarian, commerce system that Europe has. Now, if we're in Europe, I would be a little bit concerned. But here in America, the courts have always backed up big tech, big business. I'm not saying that that's good. I'm saying that that is the most likely thing to happen going forward. And AI can get around a lot of that. But the idea of being able to scrape the internet, being able to take all human knowledge, these are incredibly fast things. And it doesn't matter. It's going to be a cat and mouse game. So the AI is always going to be faster than regulators.
I want to move quickly. We're going to go to inflation now. Catherine, I want to ask you about inflation. So where do you think inflation, do you think it gets back? Well, the Fed doesn't think it's going to get to 2% until 2025. But do you think we see softening in inflation, core inflation specifically, without food and gas prices?
The Fed is going to cut next year. The question is when and why. The why, I think, is the most important. So if this immaculate disinflation, which is inflation moving lower, not actually deflation, prices aren't dropping. They're just rising at a slower pace. If that happens without any rollover in the labor market, this fabled soft landing, I think that's less likely than some sort of deceleration in economic activity, which would bring inflation back to the 2% target. So I doubt we get to the 2% target next year or the following year. The Fed cuts next year because inflation is moving closer to the target or because we're in recession. There's a few things that I think we have to take into account. Right now, the markets are priced to perfection. But all of that yummy money that I like to call it from the federal government during COVID, that is drying up. That's going to be gone in the first half of next year. Rates are high and they're going to start to pinch. So the U.S. consumer is feeling the brunt of still high inflation, a labor market that's rolling over, having to repay their student loans that they took out. That started in October of last year. Yeah.
I want to bring Lee in here. That we have 30 seconds left, and I want to get this from Lee. I have $100 to put on a stock. What sector, what company do you like a year from now, Lee?
Believe it or not, you're still going to have to be invested in some of these big mega cap tech stocks. I hate it. I'm a value investor. I don't like it. But if I had to have a buck, I know I'm hedging. I would put 50 cents in the NASDAQ 100. And I put the other 50 cents in small cap value. There's a ton of ETFs that track U.S. small value because you're going to have those banks and tanks and cranks, real economic things moving upward. But still, at the end of the day, the big growth, the big thing that's moving the needle on earnings per share are still these big overpriced tech companies. Nothing we could do about it.
Yeah, Catherine, Lee, thank you very much. Lee, I have to tell you, I'm feeling a little awkward with the signs back there sort of sideways. Is that me? Is that what I've been drinking last night? What? It's kind of awful. But Catherine, Lee,
it's New Year's cheer, Edward. It's New Year's cheer.
Thank you guys. Thank you guys for this. I appreciate it. We'll talk later, I'm sure. So